Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib, and MBS Highway's created exclusively for Mortgage News Network, and it's brought to you by our friends at PRMG. They're working for your best interest. A lot to go over, a lot to cover, very housing-centric. So let's get right to it. First of all, last week, a lot of news came out with regards to the housing market. FHFA, which measures appreciation, real appreciation on homes with a mortgage that is a conforming loan amount, they showed that appreciation year over year was up 4.6%. Yes, it's true that mortgage rates are about 1% lower, but still, we are seeing very nice appreciation levels. Remember, it wasn't that long ago, everybody told you that the housing market was dead. Well, not us. We told you that things were going to remain hot, and they are, and create a lot of wealth with that. We anticipate the housing market to still remain very healthy for quite some time, simply because of supply and demand issues. And underscoring that, we did get news on existing home sales. So this measures the sales of homes that are not new construction, that are existing homes. So when we take a look at that, the number was down 2%, which if you think, well, that doesn't seem that great, it's coming off of a 17-year high. Plus, the reason for the slightly less amount of sales that occurred was because inventory levels shrunk. There's less inventory for people to take advantage of. And listen, if something's out of stock in a store and you don't buy it, it doesn't mean the store can't sell. It just means there's no inventory. People want to buy it, so it doesn't mean that it's not healthy. There's just no supply out there, or a lack of supply in this case, to sell. We also got news with regards to the median home price. That was up 5.9%. Now, this is a little different than appreciation. Appreciation measures how much the value of a home is going up. Median home price says that this is a home value where half the homes sold were above this, half the homes sold were beneath this. So it's just basically the mix of homes being sold. But still up 5.9% shows that overall home values look to be increasing. We got new home sales too, and boy, you know, Diana Olick from CNBC, she reported on this, and she really botched it up. She said it was a huge miss and a big revision, big miss, huge miss. Really, I don't know where she's getting these numbers. The consensus estimate was for 698,000 units, came in at 701,000 units. That's not a miss. That's actually exceeding expectations. Then she said, huge revision to the previous numbers. Well, we came in at a 17-month high when we saw those numbers come in, and it was at 713,000, was a 17-month high, and it was revised a little bit lower from 713 to 706. This is not huge numbers. It's crazy how the media spins this negativity for selfish purposes of getting ratings to try and strike fear in people's hearts, saying the housing market's bad. It's not. These numbers are very good numbers, and what she hid in her report was that it's up 15% year over year. You know, these are really good numbers. So we have to be careful with how the media's version of reality is interpreted by our real estate agents who need our help and consumers who need to know the truth. And speaking of needing to know, how about this week? There's a lot of stuff with regards to housing. You're going to get the Case-Shiller numbers, which will measure appreciation levels across the nation as the gold standard. I think that this will be an important number for us. We're going to get that Tuesday, and then we're also going to see numbers that will come out on pending home sales, so signed contracts on existing homes. Also an important number, especially since interest rates have gone up a little bit from their lows that we had seen at the end of August, early September. So these will be interesting to see. Now, there's a lot more. You've got a Fed meeting. We're going to get a rate cut. It's going to be a quarter-point cut. And if the market perceives this to be inflationary, we will see yields, interest rates on mortgages get worse. And that's going to be a tough position for you to be in, because the media is going to be talking about lower rates. People are going to be calling you up, oh, great, rates are lower, I get a lower rate, right? And then you might watch a rate sheet move away from you. So you have to be cautious here in laying the groundwork for how is this perceived. We'll get some help on that. It'll happen on Thursday, which is the day after the Fed announcement. And on Thursday, we're going to get inflation numbers. That's the PCE. That's what the Fed's favorite gauge of inflation is. If that starts to tick higher, oh boy, it will be rough for mortgage rates. If it's tame and calm, mortgage rates should hang in there pretty well. And they've been dancing along these levels. Remember I told you in the 10-year Treasury, watch that 177, 178 area. And it has been on either side of that all week last week. I told you to watch it, and that's what's been the gravitational pull. Things could change this week. And then, of course, on Wednesday and Friday, we get jobs information, ADP on Wednesday, and then the big jobs number on Friday, which will totally set the tone for where we are. Watch weekly earnings. Watch for inflation there. Unemployment rate really coming down to 3.5%. Let's watch what happens there. Team, it should be an exciting week. You need to be on MBS Highway for weeks like this. We give you scripts that you could put on social media to talk about all these things. There's a daily update that you could use. You can co-brand material on anything. Do a real estate report card for your clients. Debt consolidation tools, which will increase your volume in any environment. Doesn't matter what rates are. If you take a walkthrough on it, it will blow you away. Check it out. Have a great week. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.